What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our Tuesday morning market open live stream. Hope you all are doing great and are having a great start to the day or end to the day, depending on where you're watching from. Pre-market, we are seeing the markets rotate back higher a little bit after yesterday's sell-off. QQQs are back positive so far in the month of December. It's up over 3940 basis points. We've got S&P 500 still down so far in December. It's down 46 basis points yesterday. It's pushing up almost 30 basis points pre-market right now. With Tesla pushing up, Nvidia's back over 181. It's pushing up over 1% as volatility, and the VIX here selling off 3%, and it's now sitting at under 17. When it comes to crypto, Bitcoin is rotating back up to over $87,000. And Ethereum also sitting at just over 2,800. So crypto, of course, has been struggling quite a bit as commodities are taking all the liquidity as silver continues to trade near all-time highs at over $57.50 per ounce, and gold prices are sitting at just over $4,200 per ounce right now. So hope you all are doing great. Welcome. Good morning, everybody. And it's very, very nice to have you, Jojo, Leatherface, Green Day. We're going to find out, of course, very soon, but markets are looking up. Volatility is coming down. Crypto is seeing some momentum, so there is a little bit of a risk-on rally here happening pre-market. And then, of course, we're going to take a look at the market dashboard, the MoneyVest Index, as soon as we open and get a better idea of where this market could be headed. In December so far, as I mentioned earlier, the first day is in the books. And we are slightly down about 0.5% so far, but this has been a 7-month streak for the market, right? 7 straight months of gains for this market. I think the last time we have to go back to is 2017. 2017 was the last time we experienced about a 9-month streak. So 9 months straight, the markets went higher all the way from April to pretty much close out the entire year. Momentum was very strong. We were pushing higher month over month and getting up to new all-time highs. In 2017, we had only 1 month, which was red, and that was also a flat month. March, we were essentially flat. It was almost a picture-perfect month, as every month we were pushing higher in 2017. So that's how far back you have to go to. And then, of course, there's a 2021 rally here where we experienced 7 straight months from February to August. So that was the last time we actually experienced a 7-month rally. And then September was brutal. In 2021, we were down 4.76%. So that was the 8th month for S&P 500. So that, those are some of the circumstances that are very similar to what we are experiencing right now in this market. So good morning. Who has checked out the new MoneyVest platform? Good stuff. Hit the like when you come join us in the community if you haven't yet. Yes, I love it, honestly. I love the fact that we can add to home screen and it actually pops up as an actual app. It looks like an app, right? So that's pretty cool. And I've essentially been logging into that with the mobile version, probably like 15, 20 times a day to just kind of check where the markets are. Can go over to the dashboard, can go over to the MoneyVest Index, can pretty much look at the shopping list. And we're going to be, again, community curating all of this. So if you did watch my MoneyVest tutorial that I posted earlier, so if you come over to our Patreon, if I go over to our collections, if you come over to the homepage and scroll down, you should see the video that I posted earlier. Let's see. This is a free video that I posted earlier for everyone to watch. Collections. So there's a new collection. There we go. So MoneyVest platform, by the way, this is for free. Okay, this is for free, available for everyone. Doesn't matter if you're a member or not. You can pretty much watch this video. There's an 18-minute video that I go over, and this is a brand new collection called the MoneyVest platform, where you can watch this entire tutorial and it will go over everything you need to know about the MoneyVest platform, right? So if I hit play, again, you don't need any kind of subscription or payment, and you can pretty much access the entire tutorial, where once you've signed in, you can pretty much access all of this. I'm going over in a tutorial, helping you navigate the entire website, the platform, where everything is, and how you can customize a lot of things. You can add indicators, seasonality, all that stuff is going to be available. So that is a tutorial. And moving forward, as I said, we are going to be curating this from the community, because at the end of the day, like, the most valuable insight is coming from you, right? So it's you who is the most important in this entire project. So we want feedback, we want a lot of input, we want a lot of insights that you can help us with. And so we're going to be doing a lot of these private live streams with all the members. And once a month, I'm going to bring my notepad. I'm going to take down all the notes with all the feedback that you have for us. And then we're going to go back and fix those things, work on those features and those ideas. And then we're going to do that every single month, right? So that's going to be the game plan moving forward, is to make this an absolute beast of a platform for all of you. So provide all the information that's available out there from all the data providers that we have access to for all of you, right? So that's what the goal is to make it super, super useful and valuable for all of you guys. Okay, love the mobile version. Pre-market is green. We're so back, Walter. Yep, it looks like we are. It's super smooth on mobile, really impressive, perfect. Love the free stuff. Yes, so you can pretty much watch this entire tutorial for free. There's no need for any kind of subscription, because it's a tutorial, right? You can pretty much understand and see what this platform has to offer. How do you add the MoneyVest as an app to home screen? Yeah, so I did mention this in the video as well, but all you have to do is just go to the browser. And of course, once you're logged in, there is going to be a share button. Then you just hit share and then add to home screen. And once you do that, it's going to actually add as an icon, MoneyVest, with the app icon on your phone. And you can pretty much tap that and it's going to be locked in and you're going to be able to access it right away. So it just, it was a little bit of a nice moment to see that, as an app kind of show up on my phone right next to like TradingView and Discord, and that was pretty cool. So in 2026, we're going to be launching the official app, but we just have to get around the iOS and the Android and the Play Store and all that regulations and all the different policies that they have. But we'll get there eventually. Slow and steady is what we want to build with all of you guys. So I think it's going to be great. Okay, everybody. So here we go. Markets are pushing higher a little bit. Crypto starting to rotate back to the upside. We're starting to see some upside, but overall, we're still in a very strong downtrend for crypto. This year, I think really is the year for silver and gold. Silver has officially doubled, this year in 2025. Gold is also up over 60% year to date. And then if you come take a look at some of the other stocks, of course, there is, some stocks that are up significantly more. For example, Google is having a stellar year. More so over the last couple of weeks, this rally has really picked up. It's taken off because last 3 months, Google is up 50%. Prior to 3 months ago, Google was nowhere on this chart. It was up like maybe 10, 12%. It was just like kind of flirting around the S&P 500's return. But last 3 months, it's really taken off with the Gemini models, with the investments they're doing, hyperscaler, cloud, everything that they've been working on. It's just really taken off on the back of AI. And of course, the fact that they're launching their own TPUs, which Meta is going to be leasing from them. Google has really been a strong contender, for year-to-date gains. It's the second best performer in this watch list. Of course, we're looking at Magnificent Seven and commodities and crypto and bonds. So this is going to be a whole breakdown of the assets, right? So silver is leading, almost doubled officially year to date. Gold is up 64%. Google is up 64%. Gold is up 60%. So again, very strong gains. And then fourth is NVIDIA. So nothing kind of ranks up top other than these four. NVIDIA comes in at a fourth position here, 32%. Then we've got Netflix, 21%. Mercado Libre, I don't know why I have that stock in Magnificent 7. I have to remove that. But it's up 20%. Nasdaq's up almost 20% year to date. Another blockbuster year. Absolutely incredible. I mean, this thing is up like 3 years in a row, over 20%, which is very, very rare. I mean, you don't see that very often, right? So 3 years in a row of 20+% performance is not the normal. And this is what kind of skews everyone's expectations, right? So over the last 3 years, if you look at the market performance and you look at 20%, 20%, 20%, every year, we become very spoiled. We become like, okay, every year we can do 20%. It's easy. But this is not the norm. Like, this has been the result of an artificial intelligence boom that started like 2 years ago. On the back of this AI boom, we are seeing a lot of spending, a lot of investments, and a lot of collaboration between companies. And as a result, there is a lot of momentum behind these companies, right? So we got S&P 500 up 15%. I mean, think about it. The average return for the S&P 500 has been around 7 to 8%. But the last 3 years, we have been more than tripled, 20%, 20. And then this year, we're on track to doubling our average return. So, if you really consider we have increased by 8 times, 8 times the average percentage return from the S&P 500 on a yearly basis, which is a pretty substantial number, to think about it. Microsoft up 14%, Apple's up 13.7%, the Dow Jones is up over 10.8%, Tesla 10.2%, Meta is still struggling, 8.67%, Amazon also struggling, 5.3%, the bonds are still not the best place to be, 1.1% higher year to date, so essentially flat, and of course you've got crypto. So Bitcoin is down 6%. I think I should also add Ethereum to this watch list as well, just so we can get an idea on where Ethereum is. So let's just do that, and let's come over here. Again, in terms of performance, and Ethereum is down over 23%. I think I just added Ethereum to euros. There we go, USD. So Ethereum is the worst performer on a year-to-date basis, down over 14.5%. Bitcoin is down almost 6%, and everything else is up, doing very well. So yeah, that's where we are in terms of those performances. Mark, thank you so much. Nice upgrade to the MoneyVest website. Kudos to your team. Thank you. I appreciate that a lot. Glad to be a part of this community. Thank you so much, 206 ICE. I appreciate that. You think $30 is a good price to sell in the money puts for BMNR? Sad when treasuries outperform Bitcoin. I know, right? The bond market, even TLT, is outperforming Bitcoin year to date. And again, a lot of things changed over the last 3 months, right? This profile was completely different. Markets have shifted quite a bit because, Bitcoin up until October was doing very well. I mean, it was up to new all-time highs. It was sitting at all-time highs at over 125,000. First week of October, it's really just the last 2 months. The entire market has shifted quite a bit, right? So, I mean, Bitcoin's dropped over 32% in the last 2 months. Silver went through a little bit of a dip. So it was, obviously in a pretty strong correction in October when Bitcoin was at all-time highs. It was down like 16%, but the things reversed very quickly as silver took off 26% and a 32% drop in Bitcoin. Google ripped over 50% in the last 3 months. So a lot of things shifted in the last 2 to 3 months here. So when it comes to puts on BMNR, you would be looking at in the money puts at $30. They would not be in the money because right now it's trading back up to over $30.50. So you would be slightly out of the money or close to at the money puts. Of course, the premiums are going to be very, very high. We can take a look at it together. So let's just run through that very quickly. Depending on the expiration, I don't think you mentioned the expiration there, but let's just go over to like 1 week out. December 12th, $30 puts are paying for $2.36. And that is, I would say it's a little bit higher considering that BMNR is up pre-market. It's up over 5.5%. So expect those put premiums to be lower. It's not going to be $2.36. I think it's going to be closer to, I want to say like $1.80, $1.60, because as price gets further away, I'm also looking at 29. So $30 is $1.93. And then as soon as market opens, I think that number is going to drop down to like $1.40, $1.30. So that's going to be lower. But yeah, I mean, if your plan is to accumulate BMNR, then that is a good potential trade to look at somewhat at the money puts. But be ready to get assigned on those shares because the delta is going to be very high, closer to 58 to 60, which obviously does suggest the probability for getting assigned on those shares is pretty high. So make sure that you do have the cash to buy the shares if you have to. And as I mentioned, always sell puts on stocks that you actually want to buy. ERO. So quick analysis on ERO. Looking at the weekly time frame, it seems to be going through a ton of consolidation. So there's a lot of consolidation happening for this stock. So we've got a pretty strong resistance sitting right about here, exactly where the price is trading. And then we've got a pretty strong support that's going to be right about there for ERO. So that's going to be that support resistance all the way up to $25, $26. It's a bit overbought right now, even on a weekly time frame. It's really getting up there over 78 RSI. So if you do get any kind of a pullback, there's going to be another support down here at 17, 18 bucks for ERO. There's going to be maybe another support at $19. 19 bucks is going to be a better support level to watch for this. Okay, Sean, a MoneyVest website upgrade looks great. Thank you so much. I appreciate all the great comments, everybody. Really, we put in a lot of time and effort, and we also changed our data providers, because we had some issues, and it's been a long journey because we did the first launch in June 2024, and this was after a solid 18 months, spending 18 months into this upgrade with the new data providers because our contract ended, and then we had to start a new one, and a lot of logistical challenges and a lot of work that's been put into it. So our goal now is that once we have everything sorted with the launch, now our focus is on building new features, building new tools for all the investors. So being able to create watch list and accessing a lot of out of the box data models that are not readily available for a lot of retail investors. That's really what the whole point is, because when you look at the market dashboard, that gives you like a whole bird's eye view of the market. We don't have to go out there and start collecting all this data from different sources, but rather everything's going to be in one place where you can look at it, it's color coded, and it's going to give you a full breakdown of how the markets are doing in a given day to day, right? So that's really been our philosophy, is to understand the risk reward ratio at any given point during the day in the market. MongoDB. So MongoDB is something that we also use for all of our data on the website. So yes, I think it's a very, very good company to consider. But again, they do lack profitability. Revenues are increasing, which is good. Profitability is almost getting better. That's also a pretty good sign, 40% higher year to date. So yes, this company definitely has a lot of potential long term. And if you look at the earnings expectations here, we're looking at pretty strong growth over the next several years, and then on an annual basis, revenue from $2 billion to estimated almost $4 billion. That's going to be a good 100% growth in revenues over the next 4 years. We are trading at, I would say, a little bit on a higher valuation, 70 times cash flow, a little bit over 11 times sales, which price sales multiple is not as high as the price to cash flow multiple. So I would argue that this, yes, is a fantastic business. Negative net debt. We got way more cash than debt on the balance sheet. That's pretty solid. And then if you look at the shares outstanding, we've got a pretty stable shares outstanding, although it has been increasing since 2018 from like 36 million to over 80 million. So that's a lot of dilution the company has done over the last several years. So that is also what's holding back the stock a little bit. But we do have a lot of resistance here at 380s, 380 to 390. So this right here is going to be that resistance level to watch for MongoDB, with a very strong support down as low as 142, 143 for MongoDB as well. So that's the range within which this has been trading. All right, so health sector will get, I'm not going to say that. Okay, it's going to get crushed today. Yeah, healthcare sector has been picking up quite a bit, so it's been doing well. Might be closing out the BMNR CSPS sold at 3:30 yesterday. What a rip. That's amazing. Great timing for sure. Yep. As Dave says, nice timing. If the spread between the bid and ask is small, is that good? I want to close my CSP on SoFi and the bid is at $9 and the ask is $10. So that just means it will get filled right away, correct? So yes, if the bid ask spread is really, really small, that means there is a lot of liquidity. And the slippage is going to be small. But still make it a habit to always put in limit orders and never put buy orders for market orders, because like I said, it doesn't matter if the slippage is small or wide. You always want to err on the side of caution, where you're putting in limit orders and you know exactly what you're paying or receiving when you are selling or buying options. So I always make it a practice to always put limit buy orders, limit buy or limit sell orders. Because I just don't want my orders to be at the mercy of market makers, where I'm gonna get screwed over whatever they see me fit in terms of filling that order. So yeah, that's gonna be my 2 cents there. Thank you. Kevin bought shares and I said WTF, LOL. Bunch of home builder stocks have been moving in the last 2 weeks as well. It sure was nice to see some Altman sweating OpenAI's dominance to Gemini. Google has him scared. Is this platform Webull? Which one? This is TradingView. So this is what we use every day for technical analysis and charting. And then Webull is different. Yeah, so for options analysis, yes, that's Webull. That is what I use like most of the time for looking at options. Yeah, so yeah, there's a lot of liquidity. Keep track of that decimal point. Yes, always make sure that you are, making sure and keeping track of the spread and where you're putting your orders. So, which trading platforms are good to trade options in Germany? I think, I don't know if we have that list. Let me just bring that over. And let me see if I can go over. So we have a broker list. As you can see, looks like Dave posted some Tesla analysis. That's incredible. I'm going to heart that for sure. But if you come over to the broker list, we've got Germany. Probably somewhere here. US, UK, Canada, Australia. There we go. So I'm not sure if these are going to allow for options trading, but these are just brokers that our members are using from Germany. So again, there's no affiliation with any of these brokers mentioned here. It's just our members. If they're part of, if they're from this country, they mention what brokers they're using. So we just created a list for all the new members coming in. They can refer to this. And if you are from Germany, for example, there's DEGIRO. Interactive Brokers is pretty much global. They do operate in a lot of different countries and, of course, offer options trading. Then there's Trade Republic, and then Tastyworks are a few other ones to also consider. So then we also have a lot of other countries that if you are joining us from different places all over the world, you can pretty much refer to this list. Yeah, Interactive Brokers is pretty good for most traders. Yeah, that is TradingView that we use for charting, and of course you can also look at a lot of other fundamental data. Okay, good morning everybody. The broker defaults to the ask, so I should go to, well, the broker defaults to the ask, so I should go to close to the bid, but you can't actually buy to close at like $9. You can only do it on $5 increments. I think so, $5 or $10 or $15. Well, I mean, it should, whatever you put your limit order to be, that's what it's going to be. And if the spread is small, then you can always consider putting the bid, and still the probability is going to be high to get filled. But if the spread is wide, and if you've put it at the bid for buying to close, then yes, the probability could be low that it may not get filled. So you're better off just kind of going off of the last traded price, which is also known as the mid price. Or you can be a little bit higher than the bid if you want a quicker fill. Robinhood, if you're using Robinhood, that also tells you like the likelihood of fill. If you're putting in a limit order, it tells you whether there's a high likelihood or a low likelihood, or whether this order is going to get filled. So use that to your advantage as well. But even if you are, let's say, hitting the bid or hitting the ask, depending on whether you're buying or selling, still put a limit order because you never know how quickly the markets are moving. And what you might be seeing as the next best bid, it's a tongue twister, or the next best ask can change dramatically by the time your order is actually put in. So, as I mentioned, always consider putting limit orders. WRD, let's take a quick look on WeRide sponsors here. So, looking at 3% higher right now, so pushing up over 1.2% pre-market. I would say it's got a very strong support right around here, so roughly at 670, 680, and a resistance all the way up to as much as 1277. So that is going to be a resistance level to watch for WRD. We're seeing a nice little bounce back higher. There is some institutional buyers stepping in, so the L3 Banker Oscillator coming in with some buy orders from the whales, and so resistance all the way up to as much as $11-12 for WRD. Yeah, Les dudes, I'm from Germany and use Trade Republic, German Robinhood, and thinking to switch to IB. You said something that was very important the other day. Make sure you set your own prices when you buy back your covered calls. Yes, always put your own limit orders. In both circumstances, whether you're selling or buying, always put your own limit orders. SOXL BITX moving this morning, risk back on. Well, BITX is moving because Bitcoin is pushing up. So it's up over 2% right now. So it's back over 88,000. So BITX, BMNR, all of these are pushing up. I wouldn't necessarily consider this to be risk back on, but I think it's just a technical rebound. And Bitcoin is what we're witnessing right now. But the good thing is that we did not make a lower low. So that's actually one of the better things to consider is, okay, we made a lower low here. You know what? I'm just going to delete everything and show you guys. I'm going to remove all of this as well, so it's cleaner. So if you look at the chart and where we were making lower lows, we made a lower low here, a lower low, another lower low, and then another lower low. We had a lower high, boom, boom, right here, boom, right here, boom, right here. So we're just consistently trading inside this sort of downtrending channel. But what happened here is that we actually made a higher low. So that could be the start of a trend reversal, or it could be the beginning of the end of this downtrend for Bitcoin, right? So something to keep in mind. Now, the next big target for us to break out of is going to be this level, 93,000. If Bitcoin can take out 93,000, then we can confidently assume that we are shifting in that trend. We're starting to make that higher high and that higher low as well. And so then that would mean that, okay, risk is indeed coming back on. Okay, Palantir. Let's take a look at Palantir. So Palantir, I would say, is still in the context of this downtrend. So lower highs and lower lows that are still there inside this downtrend here. And resistance all the way up to 171, 172. So this is going to be that level to watch for Palantir, with a very strong support down at 161 for Palantir. So nothing crazy, just another company that continues to trade inside this downtrend. It's a phenomenal business. Plan is to hold long term. IBKR is complex to use. It is a very, very sophisticated platform, that's for sure, because it was primarily built for institutional grade trading, but then of course they've branched out to a lot of other markets, and as a result, they're one of the most successful brokerage companies in the world. This is actually part of the shopping list as well, IBKR. And, since 2022, the stock's up massive, up over 400%. Revenues and profits are very, very strong for this business. That's actually one of the reasons why we have it in the shopping list. And so it is a very high margin business as well, right? We're looking at, think about it, 95% gross margins, 95%, guys. Right? And that's been pretty consistent. That's one of the reasons I love this company so much, is because it is insane in terms of those margins. And then net margins are sitting at over 9% because they do have a pretty hefty OPEX. Operating margins 87%, but then other expenses do eat up a lot of those profitability. But still, extremely profitable business with the valuations right now. Where are we sitting at? 31 times earnings, 2 times sales, over 1 times cash flows. So not crazy. And then it does have a lot of cash. The amount of cash this company has relative to its debt, it's insane. So cash and cash equivalents, or cash and short-term investments, if I were to put it, is $92 billion. $92 billion of net cash and short-term investments versus all their liabilities. Total liabilities are $180 billion. And then if you consider just total debt, if you come down here, just the debt amount is only $28 billion. So yeah, lots of cash relative to the debt for the business. And as I mentioned earlier, it is part of the shopping list for a reason. So keep a close eye on this, of course. SoFi and HIMS, let's take a quick look. Where's SoFi trading? SoFi is around mid-20s, 29 now, back up to almost $30. It's been consolidating sideways. I think that's a good thing. This is exactly what Tesla also went through. This is what a lot of these companies are going through right now, is after months and months of rally, we are now starting to see some sideways consolidation, which is a good thing. You always want some stabilization because, you don't want a stock to be extremely volatile where it goes up and comes back down aggressively, then goes back up, then comes back down. I would much rather take a stock going up and then it consolidates sideways for a little while and then it breaks out for the next leg higher. And I think that's what Tesla is doing. Tesla's been kind of hovering between 390 and 470. It's a pretty wide range, but that's Tesla for you. And then SoFi also is consolidating sideways after a huge rally since April. The stock's gone up 200%, and now we're just consolidating sideways. So I would keep a close eye at this resistance at close to $30 and a very strong support at $24. Let's take a look at HIMS. HIMS has just been struggling. I mean, this stock has just been getting crushed week after week from its resistance. It's got a quadruple top at $70, $72, $73. It's unable to break above that level. And now we've got a pretty strong support at $34, $35. That still seems to be getting validated, but right now it is still looking very weak as it gets rejected here at this resistance of $39, $40. So, love me some SoFi. I have a smart money concept indicator enabled on my trading view. Can you show us which options to enable the print of the higher highs and higher lows? I think there's a few different technical indicators that do allow you to print for the higher high, higher low. I'll just have to kind of spend some time figuring out which one's the most accurate, because it's also a very difficult math, right? The math and the logic is actually quite difficult, because I was thinking about building something like that helps you identify patterns and support and resistance levels, and we did spend a considerable amount of time trying to figure out if there's any math that can be standardized to look at any chart. But the problem is the candlesticks and the markets in general are very chaotic. They're very chaotic, and the logic has to be extremely sophisticated to better understand something that can be applied and standardized across all charts for all stocks. But yeah, something I will do more research on and see if I can bring something up for everyone. What is the support for a lift, and is it on an uptrend, or do you see a lower high forming? Let's take a quick look here. So lift is, so overall on a weekly time frame, I would argue that it was in a state of consolidation, but now, yes, you could argue that it is in a nice uptrend as it continues to make these higher lows, and it is also making some higher highs. So yes, we are in an uptrend. On a daily time frame, it can be even more clear. But then now we're kind of consolidating within that uptrend with a very strong support sitting right at $18, $19. So that would be that support level aligns well with that previous resistance. And then we've got a resistance all the way up here at $23, $24. So that's really the chart within which it's trading. Any plans to add more Meta? Yes, the plan is to add a few more shares. I might add maybe like today or sometime this week. 645, it's moved up quite a bit, but that's okay. I'm planning on adding more Meta. Okay, let's see. Any plans to add more Meta? We covered that. Love me more SoFi. How about Robinhood? So let's just take a look at Robinhood here. So Robinhood, it did break down a little bit. So I would still consider this to be in a bit of a downtrend. So lower highs and lower lows. So this right here is the lower low here. Got a lower high over there, starting to continue to trade in that lower high, lower low pattern. And $93, $94, I think it's going to be a pretty strong support, kind of aligned with this previous level. And right now we also have a decent support at 120. So 120 previous support, previous resistance, another support right about there. So those are going to be 3 to 4 times it's validated that support level. So that is going to be that support for Robinhood. HIMS below the heavy buy. Did I buy a lot? So I do have about 100 shares of HIMS. The plan is to, again, keep it to a level of comfort, which I don't want to overexpose to any positions. Especially if the conviction level is not as great as something else out there. So that's another thing about the shopping list is like there's like 40 plus stocks in there, right? Not every single one of them has the same level of conviction. Everyone's going to have different conviction on different stocks. So, really the idea is to go through that list and see where you have a very high conviction in which companies. They're not going to be all 40. I can guarantee you, if you go over all those stocks, you're going to be lucky if you have 5 or 7 companies that you have a really high conviction in, right? That's the whole idea, is to go through all of them and figure out which companies, which stocks resonate with you, what thesis you can come up with, where your conviction is really high, and then just focus on those. Not every stock is created equal, obviously. Every company's got something different to offer. And so then the question becomes, depending on your conviction level, what is the percentage allocation that you want to have for that stock? And for HIMS, I feel like 100 shares is more than enough. For now, I do have covered calls that I've been selling, that I've been closing. I did close out my HIMS covered calls yesterday. And then the plan would be to just sell more covered calls on the next big spike for HIMS. So that's the plan. MicroStrategy. Folks, for this, it's been a wild ride. It's been a falling knife. I have spoken to quite a few people in the last couple weeks, to be honest, that are stuck in MicroStrategy or worse, stuck in MSTX, which is a 2 times long leveraged MicroStrategy ETF. Be extremely careful. Like I know I'm going to keep sounding the alarm, something that I keep saying over and over again. Do not invest more than what you can afford to lose in crypto related ETFs, crypto miners, crypto stocks, anything crypto related, because it is still incredibly volatile, right? So unless you're okay with that level of volatility, my personal take is only invest what you can afford to lose and calibrate your risk, because it's all built on your risk appetite, right? Everybody watching this video right now, we got 277 people. Everyone's risk appetite is different. Everyone's tolerance for volatility is different. Those are things that you cannot quantify. If I ask you all to tell me your risk appetite or your tolerance for volatility, we cannot come up with a number, right? It's all going to be built on feelings, and the feelings can only show up once you start to push the envelope. If you've got 100% MicroStrategy, how you're feeling then is your cue, whether you're comfortable or you're overexposed. If you drop that position down to 1%, that is also another cue. You have to calibrate that yourself. Everyone has to calibrate their risk appetite and their tolerance for volatility themselves to better understand what they're comfortable with. It's been a crazy sell-off since July. It's down over 65%, all thanks to Bitcoin. Resistance is going to be closer to 177, and support level, unfortunately, down to $97. Although it doesn't really trade on its own technicals, I would argue, because of the fact that it's a derivative built on the price of Bitcoin. So if Bitcoin starts to recover, it already is pushing up pre-market 3.5%. Same thing is true for BMNR. Falls in the same exact category. As Ethereum dropped, so did BMNR. From 65, it's essentially been cut in half. It's down almost 60%. So with crypto-related anything, always do that analysis. Yes, Lux Algo, Smart Money Concepts, we have that as well. Yep, I use that sometimes in the technical analysis. Okay, what do you think about the theory of hyperscalers are going to leave the neoclouds holding the bag with all the debt in the next few years? I think there's always going to be demand for cloud computing, for data centers, because the rate at which we are increasing our demand for artificial intelligence and all the LLM models, it's expanding rapidly, right? So there's always going to be need for that. Are there going to be winners and losers? Is the industry going to consolidate over time? Absolutely. But I think there's always going to be a demand and a need for that. So some of the hyperscalers, in my opinion, are always going to be there. I think Google, Microsoft, and Amazon, those are 3 companies that are at the forefront of building these large data centers. So they've got a lot of levers to pull. I don't think that one business, is the cloud computing, if that starts to reach an equilibrium where supply is outstripping the demand and prices start to come down and they're not getting the best ROI, because Michael Burry is one of the biggest thing that's been brought to light by Michael Burry is the fact that they are not pricing in the depreciation of the chips, of the data centers that they're going to be investing heavily in, because after 5 years, all this technology is going to be obsolete, then they need the new chips and the new data centers are going to be built on top of that. So if the ROI is not strong enough, then yes, there could be corrections and there could be massive repricing in this space, but there's always going to be demand for that. And the people who are doing it efficiently, that's why Iron kind of stands out really well, is because they're doing it on renewable energy, right? Their cost for running the data centers is really, really low. And they're considered to be a bit of a more boutique data center as opposed to a hyperscaler. And so controlling cost and the companies that can do it efficiently, managing the ROI, are the ones that are going to have a very, very successful time in this space. The companies that are just blindly spending and building are without any math, are the ones that are going to get burned out over the long term. So it all comes down to like running the numbers and making sure that your investment actually makes sense, and not just like, spending it just for the sake of news or being in the media that we're spending in AI, we're building data centers, so on and so forth. So yeah, IBKR is too complex. I just went on Robinhood. In the end, much nicer on mobile. Yeah. Robinhood definitely wins the game for UI, right? So I think that will always win. That's one of the reasons why Robinhood is so successful, is because it kind of catered to the retail audience with a very, very good UI. Dave, yes, let's share what everyone is trading today. I want to get a feel for what you're all doing. Share ideas. Yep, that would be great. Kind of posting your ideas, posting your trades for other people to kind of lean on. All right, couple more minutes left for the markets to open. Just a couple more questions I'm going to go over. Good morning, covered call. What delta do you like and how far? 3 to 4 weeks and any leaps? So that question really depends on what your objective is. If your objective is to just collect a lot of premium, then of course you're going to want to look at deltas closer to 40 and 50 because they're going to be at the money. They're going to be higher premiums. But if your goal is that I want to, don't want to sell my shares, I want to keep my shares for as long as possible, but just collect some premiums, then anything under 20 delta, couple weeks out is a starting point, and then max 30 to 45 days out while keeping deltas under 20 is a good way to go about it. So really depends on what your objective is, because there's no one size fits all approach with investing and trading. With any kind of financial planning, personal finance, all of this is not a one size fits all. There's general principles that are right and wrong objectively, but beyond that, it all comes down to nuance. It all comes down to person to person, what their objectives and their risk tolerance and liquidity needs are. So the more context you give, the better the answers will be, right? So same with ChatGPT, right? The more information you give it, the better the output and the response will be. Otherwise, nobody really can provide valuable insight. Okay, a minute left for this markets. We are slightly pushing higher. December is also one of those months where you just like don't want to work or don't feel like working. It's just like a holiday month. Because I was watching this reel the other day, and this person was like, why do we even work in December? Because the entire month it just feels like taking a half day, taking a long weekend, and but it's good. It's good. Like December is usually one of those times where you just kind of wind down after a very, very strong close to the year. So that's what it is. But we're gonna still keep going, obviously, and we're going to do a little bit of a longer live stream in the next couple weeks as we are getting ready to close the entire year, because I think this market deserves a longer live stream for sure. Markets are open, so here we go. Crypto is pushing back up over 88,000. Ethereum is back up to over 2,800. We got volatility sitting down back in the low 16s. By the way, VIX data is going to be available on the website soon directly from Cboe. It's going to be 15-minute delayed data because that's what's allowed right now under their Cboe access. But eventually, we're going to be working on getting real-time data as well. But we're going to have the VIX percentiles, the VIX spreadsheet, all of that available for everyone. So, all right, here we go. Markets are indeed open. QQQs are up 30 basis points. S&P 500 up 22 basis points, or slightly higher, but we're still down on the month. So far, we'll see if we can actually close green or not. BMNR is up over 6%. Very, very nice to see that. So if you come over to the crypto watch list, there's a lot of green here. BITX 7%, Ethereum ETF, BMNR, all of these pushing higher on the day on the back of crypto. Thank you so much for joining, everybody. Really appreciate it. Make sure that you drop a like, subscribe to the channel. Again, this tutorial is available for everyone to watch for free. This kind of helps you navigate the MoneyVest platform, the brand new platform that we have launched. You can access it on web as well as mobile version, and this will give you insights into everything macro related. The MoneyVest Index is going to be available for your decision making, and all of that is now officially out there. So thank you so much. As always, happy investing. I'll see you all in the next